Start with Senate Enrolled Act 98. It changed the funding sources allowable for expenses incurred in the maintenance of county highways. Obviously, I know you're aware, and we've got calls into our office about highways need money for different things, and resources are short, and they had very specific legislation on where that their money could come from. So this amended IC 8-18-8-5. This is effective July 1, 2012. It takes out the provision that no ad valorem property tax could be levied by the county for the maintenance of county highways, except for emergencies and by unanimous vote of the fiscal body. So that was removed. To the listing of the fund sources that could be used, it adds property taxes and miscellaneous revenues deposited in the county general fund. It also gives an order of what the funds are to be used. So first, where before any of the funds listed could be used in any order to pay the expenses of the highway maintenance. So now it states that first, these expenses will be paid out of funds from the gasoline tax, special fuel tax, and the motor vehicle registration fees. And then, in addition, a county may use funds derived from the county motor vehicle excise surtax, county wheel tax, county adjusted gross income tax, county option income tax, riverboat wagering tax, or the new one, property taxes and miscellaneous revenues deposited in the county general fund. Senate Enrolled Act 115, IC 1-1-3.5 provides that in regard to statutes that are identified by populations, this is important for the formulas based on populations for units of government, that the population used is based on the census. I know we're all aware of that. What year the census is used is determined taking the year of the latest census that has been delivered to the state and received by the governor. He did receive in 2011 for the census in 2010, and so starting in April 1, 2012, we now use the 2010 census. This law also changed some of where they had just population numbers, they now will use like county name or some city names. There's some constitutional decisions that had to be made that they could go ahead and use those names instead. Senate Enrolled Act 147. This bill impacted the county elected officials training fund, and you've heard about that today. I'm not going to really add very much to it except to say that there's 5 offices that are sharing this fund. And so your county council is going to have a lot of fun trying to figure out who gets to use it. Also in Senate Bill 147, effective July 1, 2012, IC 6-1.1-22-8.1 was amended. It clarifies how a person is to direct the county treasurer and auditor to provide electronic property tax statements, provisional bills, etc., or any other information relating to these under this code. And it's the DLGF is to prescribe a form that a person may submit to the county for direction to do this. So the DLGF will be coming out with a form on that. In regard to the statements to be sent, the county treasurer shall maintain a record that shows each person to whom that statement or other information is transmitted by electronic mail under this section, and the information included in the statement. And now the county treasurer also has to document if they received a notice that the person's electronic mail was undeliverable. IC 6-1.1-22-9.7 was amended in regard to payment of property taxes by monthly installment plan. It changed the name from monthly installment plan to say monthly payment plan. It still provides for monthly payments if that's the direction you're going to go in. Taxpayer may make payment by automatic monthly deduction from their bank account, or the new part that was added was by written instrument or electronically or both. The Act also added and defined payment period. Payment period means the months designated under this section during which monthly payments may be made. The period may not exceed 12 months and may not begin before December 1 of the preceding year or end after November 30 of the current year. And the ordinance must identify the property tax installment or installments. And the new part is identify the months of the payment period for which the payment under the monthly payment plan is authorized. So they're being a little bit more specific about that. Also, IC 6-1.1-24-1 was amended in regard to tax sale as a condition for the county treasurer to certify to the county auditor the list of real properties with delinquent property tax or special assessments that the amount of the delinquency exceed $25. So now they have a minimum. IC 6-1.1-26-5 was amended, and this is when a person is allowed a refund of all or a portion of their tax installment. Under this chapter, it was and still will be until July 1 that the interest is at a rate of 4% was also to be paid to that person. Instead of a set rate, the statute will be changed to read the rate established for excess tax payments by the Commissioner of the Department of State Revenue. And likewise, under IC 6-1.1-37-9, provides that under certain circumstances that the taxpayer was to pay interest at a rate of 10% on amounts owed due to reassessments and not paid on the due date. The 10% rate was also changed to read at the rate established by the Commissioner of the Department of Revenue. I'm going to talk to you just a little bit about that because this is a very, very fluid thing. IC 6-8.1-10-1 provides that the Commissioner will establish an adjusted rate of interest which shall be the percentage rounded to the nearest whole number that equals 2% points above the average investment yield on state money for the state's previous fiscal year. So they get that amount from the state treasurer before October of each year. The treasurer reports that to Commissioner, and then this adjusted rate of interest takes effect on January 1 of the immediately succeeding year. So effective January 1, 2012, that amount was 4%. So that's going to not be a big change, at least for the one code. And the thing is that we've noted last year it was 9%. And the year before that, it was 7%. So it does change quite a bit year to year. We'll try to get it into our bulletin, in the January bulletin, so you'll have that information available. But you can also go to Department of Revenue's website at www.in.gov/DOR, and it's under, I had to dig for this, it's under the reference library, under departmental notices. So they do publish that. Senate Enrolled Act 176, IC 12-26-4-1.5 was added to the Indiana Code. If a court has reasonable grounds to believe that an individual has mental illness, is dangerous, is in immediate need of hospitalization, treatment, the court may order a law enforcement officer to transport the individual to the nearest appropriate facility for treatment. Then on top of that, IC 12-26-4-9 was added in regard to complement this. If it is determined that there was not reasonable grounds to believe that an individual had a mental illness and was dangerous when taken into custody and transported to the facility, the costs of transportation to the facility and care and maintenance during the period of detention shall be paid by the county. So don't let your law enforcement just do that. Just to let you know, too, that that is a possibility that that could happen. Senate Enrolled Act 193. This is something you all know a lot more than I will ever know about, becoming a candidate or to fill a vacancy. But I've already kind of got a question about this, and I was like, no, it's not me, it's the Election Division. Effective January 1, 2013, IC 3-8-1-33 is amended. Before, it was just required that certain candidates, such as the governor, elected state officials, certain judges, prosecutors, file a statement of economic interest. The new chapter IC 3-8-9 is added, and this is for all local offices, that details how the person looking to be a candidate must file an economic interest statement. And this statement is to be filed with a declaration of candidacy, and also if you're assuming a vacant office. And again, that form comes from the Election Division, not State Board of Accounts. Senate Enrolled Act 231, effective July 1, 2012, adds IC 5-22-16.5 to the purchasing law. It disqualifies contractors dealing or investing with the government of Iran from bidding or contracting with a county for public works, supplies, and services. And it also defines investment activities, but thankfully for us all, Department of Administration, the Indiana Department of Administration is to compile a list determining who these contractors are by July 1. And then they're supposed to publish it, and they're responsible for updating this list every 180 days. There are exceptions to awarding a contract to such a person or company. The purchasing agency awarding the contract finds in writing that all of the following are true: that the person's investment activities in Iran were made before July 1, 2012, the person's investment activities in Iran had not been expanded or renewed after July 1, 2012, the purchasing agency determines that it is in the best interest of the purchasing agency's governmental body to enter into a contract with that person. The person that you want a contract with has adopted and publicized and is implementing a formal plan to cease investment activities in Iran and refrain from engaging in any new investments with Iran. So I don't know too many. There are a few other things. The reasons must be in writing and maintained in your contract file. There's a certification required that at the time a contract is awarded or renewed, the person being awarded must certify in writing to the governmental body awarding the contract that the person is not engaged in investment activities in Iran, unless you can give these other reasons that, yeah, they are, but they meet some of the exclusions. The certification must be placed in the contract file, and so this is something that we may also be looking for when we're looking at your compliance for contracts. Senate Enrolled Act 262. All parts of these are effective July 1, 2012. And really, it's more of a reorganization and relocating bill of current statutes, but it does have a couple of new things. It repeals IC 35-44, which are things like conflict of interest, official misconduct, ghost employment. Doesn't get rid of them. It moves them under IC 35-44.1, and then it reorganizes them. So I looked through. I didn't see anything that was really different other than a couple of references because they had reorganized it. We all know how very important that these areas are, and so if you have questions on whether they're applicable to you, you should really get in contact with your county attorney. This bill also moves certain codified crimes from IC 4 and 5 to Criminal Code IC 35, and it creates a new article, IC 35-44.2. So instead of giving the specific level of punishment for things like daily deposit, before it would say under IC 5, it would say, well, you know, it would be a Class A misdemeanor or a Class D felony, depending on the level of the money not being deposited daily. Now you'll find that under IC 35. It also, let's see, for cash books, just for your information, under IC 5-13-5-1, where there's a requirement that if you receive cash, that you maintain a cash book. They also have now made it so that if a public servant who receives public funds and fails to keep cash book, and 2, not later than 1 business day following the receipt of the funds, enter into the cash book by item all receipts of public funds, or balance the cash book daily to show funds on hand at the close of each business day. It is now a violation of the cash book rule and is a Class B misdemeanor. So that was added into that. And also another point is that under, let's see, IC 5-14-3-10, in regard to knowingly and intentionally disclosing information that is considered confidential by statute, the penalty has been reduced from a Class A misdemeanor to a Class A infraction. So I'm sure that makes you all feel much more comfortable. Senate Enrolled Act 286. This amended IC 31-34-19-6.1, effective July 1, 2012. Before, in regard to placement of a juvenile, if the court had not made written findings that the placement was an emergency, the county in which the juvenile court was located was responsible for payment of all costs of the placement, and that did cause some issues for counties getting socked with a bill all of a sudden out of nowhere. Now that has been taken out, and the Department of Child Services files notice with the Indiana Judicial Center. So it took away your liability on that. Senate Enrolled Act 287. This amended IC 33-37-7-2 that required that the clerk distribute monthly to the county auditor 50% of the child abuse prevention fees collected, and that the auditor deposit this into the county child advocacy fund, and the other 50% was distributed by the clerk to the auditor of state. Now 100% of the money goes to the auditor of state, but the fund is still viable if the county fiscal body is annually appropriating from the fund amounts that is allocated by your legislative body. So this fund may still be in use. Senate Enrolled Act 293. It amends IC 6-4.1-5-1.1, effective July 1, 2012. It's really a phase out of the local county inheritance tax replacement that was enacted in 1997. and it'll begin at a rate of 9% per year. This phase-out is related to the increase in exemption for the Class A transferees under the new law. So now the replacement amount for each county will be based on the inheritance tax replacement amount distributed to the county for the fiscal year that began on July 1, 2011. And it will have a decreasing multiplier. So for July 1, 2012, it's at 91%. 2013, it goes down to 82%. And so by June 30, 2022, a county is not entitled to any inheritance tax replacement. Senate Enrolled Act 309 and House Enrolled Act 1154. They have some commonalities. Last year, IC 5-22-15-20.9 was enacted, which was a price preference for local Indiana businesses. And effective July 1, 2012, this code was amended to include that if this is something that you're going to be considering, it has to be part of the solicitation. Before, it didn't have to be part of the solicitation. I'm sure somebody was like, hey, should have let me know about this. So that is now has to be included. At the same time, last year, IC 36-1-12-22 was added in the Public Works chapter, which recognized this price preference specifically with Public Works, and this section was deleted because it looked like it would have some conflict with the new wording under IC 5-22. Also last year, there were two different bills enacted that amended IC 36-1-12-4 in regard to Public Works. One bill changed when the section would apply. The dollar threshold was increased for all counties to $150,000. The other bill had some other changes, but they didn't change the thresholds. So, and both of these were reflected in statute. Effective July 1, 2012, this will be corrected so that only one threshold, the 150,000, will be reflected in the statute. And this means that for evidence of responsibility needed for those entering into the contract of at least 150,000. So we'll be changing Form 96 to reflect the contract, and that's the contractor's bid. We'll be changing that form to reflect that. So. Finally, IC 36-9-15-2 was amended upon passage in regard to CUME building funds. Now, in addition to what was allowed before, which was construction and repair for equipment of a county jail or juvenile detention center, now the fiscal body may establish a CUME building fund for the purchase, lease, or payment of all or part of the purchase price of motor vehicles for the use in a community corrections program. House Enrolled Act 1005, it adds 3-5-9, effective January 2013. It gives the provisions for employees of a unit or firefighters that provide fire protection services to a unit in regard to if they assume an elected office. Elected office in this chapter at the county level refers to county commissioners and county council. It states that an employee of a unit is considered resigned from that unit as an employee when they assume an elected office. And it prohibits a volunteer firefighter or firefighter under contract that provides fire protection service to a unit from assuming elected office. I'm sure we've heard in the news much about that situation occurring, so this is in response to that. The employee or firefighter may hold an elected office in another unit. An employee or firefighter fighter who holds or assumes an elected office on January 1, 2013 may continue to be an employee and/or firefighter until the term of the elected office that they are serving on January 1, 2013 expires. This next part of 1001 or 1005 we've heard much about. IC 30-1-20.2 was added. It statutorily sets out the definition and minimum requirements that counties must take in regard to nepotism. I know that the AIC has already been working with you. DLGF has put something out on their website. Basically, the statute point is that individuals or relatives may not be employed by a unit in a position that results in one relative being in the direct line of supervision of the other. And they give the minimum requirements are given as to the employment of the relatives. The unit is allowed to add to these requirements, but at least must have these minimum requirements. And it's very detailed in nature. I've already received some phone calls, and Andrew had alluded, and David had alluded to this too, that they've received phone calls. I don't know how many, if any, have already implemented this policy, but I can't just refer you to the statute that this relative is okay or not okay, because it will hinge on what your policy is saying. So I know you will be going over this carefully, and you'll be working with your commissioners and county attorneys to make sure that your policy meets the minimum requirements. The other part of this statute is that it requires that with the 100R that is filed with us, that this report must include a statement by the executive stating whether or not the unit has implemented a policy. So this is something that we're working on, and it'll be, because the 100Rs will be filed through Gateway in 2013, and so there'll probably be a statement or something to check off about it, but we got to work through this because the auditor usually is the one who submits the 100Rs, but the executive is the one who has to attest to this. So we'll get it worked out, and we'll let you know about how we're going to go about this. There's also certification that is required by each elected officer of the unit. This certification is submitted to the executive of the unit and is not to be submitted any later than December 31st. So all elected officers are going to have a part to play in this. And State Board of Accounts has a part to play in it too, because we have to look to see if you have implemented this policy. And implementing a policy doesn't just mean that you've got the policy, but that you've actually implemented it. So we'll be looking to see things like, has the policy been disseminated to everybody in the unit? There needs to be something verifiable, such as people signing off that they've read the policy. We'll also be looking to see if there's controls in place. This could be documentation that as persons are hired or promoted, that there is documentation that the policy is being followed, that the certificates are on file with the commissioners, and if not, that there was some kind of control in place that they followed up to make sure that the elected official, they warned them that you need to get this in or something like that. So it's important that these policies be implemented and that sufficient documentation exists that we can follow. Otherwise, the DLGF may not approve the unit's budget or additional appropriations for the unit for the ensuing calendar year until the State Board of Accounts certifies to the DLGF that the unit is in compliance. So I don't want to see anybody not getting their budget because of this. Another new chapter has been added, IC 36-1-21, and is effective July 1, 2012. It does not replace other contracting requirements or disclosures that are found under public purchasing laws or under the conflict of interest statement. This is in addition to. The statute states that a unit may enter into a contract or renew a contract for the procurement of goods and services or a contract for public works with an individual who is a relative of an elected official, and again, that's the same definition, commission, council, or a business entity that is wholly or partially owned by a relative of an elected official, only if the requirements of this section are satisfied and the elected official does not violate the conflict of interest statute. A unit may enter into or renew a contract with a relative if the elected official files with the unit a full disclosure, and it must be in writing, describe the contract or purchase to be made by the unit, describe the relationship that the elected official has to the individual or business entity that contracts or purchases, be affirmed under penalty of perjury, and be submitted to the legislative body of the unit and be accepted by that body in a public meeting. And then it must be filed not later than 15 days after final action with State Board of Accounts and the clerk of the circuit court. The appropriate agency of the unit makes a certified statement that the contract amount or purchase price was the lowest amount, so you have to do that, or makes a certified statement of the reasons why that the vendor or contractor was selected. So that's one of the requirements. This statute does not affect the initial term of a contract in existence at the time the term of office of the elected official of the unit begins. And there are other certification requirements that are similar to the nepotism. Again, the executive must state in the 100R report that's submitted to us that the policy has been implemented, and each elected officer of the unit will make an annual certification again that the officer has not violated this chapter, and they'll submit it by the end of the year. Oops, didn't mean to go there. State Board of Accounts, again, we're going to have to come in and determine whether or not this policy has been implemented, and we'll be, again, looking to see what kind of controls are in place. And once again, DLGF is notified and may not approve the unit's budget or additional appropriations for the ensuing calendar year. So they are really throwing that out a lot. I mean, this is maybe about the 4th or 5th place that I know of where they can't, if you don't do something, that they won't approve the budget, that they can't by statute. Well, see, when we would come into audit, we would look to see if it's been materially implemented. And that's why I said that it's not just the policy, but it's important that there are processes and controls in place too. I mean, obviously, if an elected official has taken off for the Virgin Islands or something, and they're not going to, submit that certification, you're not going to be able to do it. But the question is, do you have a process in place where you follow up and find out why didn't they do that, and then it gets documented in? So that's the kind of thing that we'll be looking for to see. We want to see that there's a process in place, not that there's necessarily 100% compliance with it. Okay? IC 33-42-2-7 was amended. In the past, a person who holds any lucrative office or appointment is prohibited from holding more than one lucrative office, may not serve as a notary republic, what's that? Notary public. It now is allowed that somebody holding a lucrative office can be a notary. House Enrolled Act 1060 amends IC 6-6-6.6-3. This is the Hazardous Waste Disposal Tax Fund, and it allows for the funds to be used for paying costs associated with the maintenance or repair of county roads. So again, there's another funding source for county roads. You cannot expend more than 10% of the balance in the fund as determined on January 1 for this purpose. And again, this is effective July 1, 2012. House Enrolled Act 1072, I'm just going to talk about a couple of things that Brian didn't. It amends IC 5-11-13-1. And again, this is the 100R report. Now the report must also indicate whether the political subdivision offers a health plan, a pension, and other benefits to full-time and part-time employees. And again, it will be submitted electronically through the gateway. And we're looking into how best to do that. And so hopefully at our fall meeting, we'll be able to give you further instruction about that. Also amends IC 6-1.1-37-11. That clarifies the time period for calculation of interest when there is a provisional bill which was not really addressed specifically in the past. And it states, if a taxpayer is sent a provisional tax statement and is later sent a final or reconciling tax statement, interest shall be computed after the date on which the taxes were paid or first due under the provisional tax statement, whichever is later through the date of the refund or the credit. House Enrolled Act 1090. This one is about tax sales. There was quite a few changes that were made in regard, and it seemed like there was kind of areas that were changed. One area is about arrangement for payments made by a delinquent taxpayer, and this is effective upon passage, which was 3/14/12. It amends IC 6-1.1-24-1.2 in regard to removing a property from the certified list. Before, a county auditor in a county with a population of more than 400,000 but less than 700,000 could remove from the certified list if the county treasurer and taxpayer agree to a mutually satisfied arrangement for the payment of the delinquent taxes. Now this is open to all counties. The county auditor may remove the tract or item from the list certified under Section 1 of this chapter if the arrangement described in subsection C is in writing, is signed by the taxpayer, and it requires the taxpayer to pay the delinquent taxes in full not later than the last business day before July 1 of the year after the date the agreement is signed. And if the taxpayer fails to make payment under the arrangement is void, and the county auditor will immediately place the property on the list of real property eligible for sale at a tax sale. And if the county auditor makes an arrangement with the taxpayer and it becomes void, then the taxpayer cannot enter into another arrangement for that property before 5 years after the date of the original arrangement due date. So, also IC 6-1.1-25-4 is amended. It adds that if a tract of real property did not sell at a tax sale and the county treasurer and the owner of the property agree before the expiration of the period for redemption to a mutually satisfactory arrangement for the payment of the entire amount required for redemption, the county treasurer may extend the period for redemption, and the extended period for redemption expires 1 year after the date of the agreement. And again, however, if the owner fails to meet the terms of the agreement, the county treasurer may terminate the agreement after providing 30 days written notice to the owner. And the extended period for redemption expires 30 days after the date of the notice. I don't know what the...
Can you repeat the question?
Sure. She was wanting to know if they're trying to get you not to have tax sales. Well, I don't know what the intent of legislation is. All I can say is that it appears that they're trying to provide avenues to get some of the property tax money in.
I think they're trying to get treasurers to take monthly payments.
And that could be too.
It's not fair to somebody that can't make the payments.
When was the law fair, Ann?
Now I'm going out, I can.
I know.
No, oh, okay.
If we agree to do this, are we setting precedent then that once you've let one family make monthly payments instead of putting their house on tax sale, that means everybody has the right to? Or is it because, what I'm trying to say is if there's a medical reason, not just being defiant and not paying it, and you say, yes, we're going to let this family, but then the next person comes along that just has had a history for 10 years not paying their tax payment.
Yeah, the statute doesn't address it in that manner. All it says if there's a mutually agreed upon. So it doesn't give any caveats to it.
I mean, we're going to be damned if we do and damned if we don't on this one.
Yeah. Anything else? Okay. Okay, IC 6-1.1-24-15 was added. The fiscal body of a county may adopt an ordinance authorizing the county treasurer to accept a bid on a tract or an item of real property offered for sale that is greater than or equal to the lesser of the amount determined under Section 5, which was what was in the past. And this would be the delinquent taxes and special assessments on the property, the taxes and special assessments on the property that are due and payable in the year of the sale, regardless if delinquent, all penalties which are due on the delinquencies, the cost incurred by the county due to the sale, any unpaid costs which are due from the prior tax sale, and any other reasonable expenses of collections. So that part hasn't changed. So now it could also be that if that is the lessor, or the new part would be 75% of the gross assessed value of the property as determined on the most recent assessment date. So whichever method would be the lesser could be used if the ordinance is passed. With this, the application of the payment is also addressed by amending IC 6-1.1-24-7. If the amount is less than what would be required to pay for the delinquent taxes and penalties, then each taxing unit having an interest in the taxes on the property shall be charged with the part of the tax due to the unit equal to an amount that bears the same relationship to the tax due to the taxing unit minus the selling price, which bears the amount. So appropriated out. Sure.
Thanks, Tara. I was looking the wrong direction. I need it.
We're giving Tammy her exercise here.
Thanks for taking my question. My council is going to consider this, and when you say 75% or how to allocate that amongst the tax units, a lot of the times these properties are going to be eligible for this because they have a lot of special assessments and civil penalties now are allowed to go on those properties. But when I collect 75% of the gross assessed value, I really want to just split it up between the allocate it on the property tax units. And I would like some clarification on whether I also have to prorate the special assessment too.
It makes sense. We might have to do some research
Yeah,
on
we're
that.
going to have to look into that.
I'll write it down and we'll see if we can answer it on Friday morning.
Yeah.
I heard you. Any other questions? Okay.
I'm making a quick note, and then Tammy will retrain the rest in her brain. She's so good at that. Okay. Finally, there's another provision in this bill. A new section, IC 6-1.1-37-10.1 was added, and it's effective upon passage, and it's kind of an amnesty program. The fiscal body of a county may, before July 1, 2012, adopt an ordinance to have this apply throughout the county. If adopted, the ordinance would apply after June 30, 2012, and until July 1, 2013. The fiscal body will deliver a copy of the ordinance to both county treasurer and to the auditor. The county treasurer shall waive all interest and penalties added before January 1, 2012 to a delinquent property tax installment or special assessment on real property if all the delinquent taxes and special assessments on the property were first due and payable January 1, 2012, and before July 1, 2013, the taxpayer has paid all the delinquent taxes and special assessments and all of the taxes and special assessments that are first due and payable on the property after December 31, 2011, and before July 1, 2013. And that would include any interest and penalties on these taxes and special assessments. So the county treasurer shall waive the interest and penalties as allowed. This would also impacts the minimum payment for tax sale under IC 6-1.1-24-5, which was amended to reflect this. The penalty and interest are excluded if this ordinance was adopted. Okay. Also, the notice required under IC 6-1.1-24-2 was amended to require that a property that is subject to the sale under this chapter after June 30, 2012 and before July 1, 2013, that there would be a statement declaring whether the ordinance, basically, we've already amended the report. It's the 137A, and it's just supposed to declare whether that there is an ordinance, and if so, if it's in effect. So I know that I've been getting some questions on this area, and it is fairly complicated just because you kind of almost have to sit down and try to see what all provisions of the law have been affected by this from an implementation standpoint. So if you've got questions or you can think of situations now, please go ahead and put them in the question box. I've already got a list and we'll be working on it. I can't make promises for this Friday, but we'll definitely try to get to it and get something out to you soon. House Enrolled Act 1163 provides clarifying language in the Public Works Statute. It amends 36-1-12-12 and IC 36-1-12-13.1. A substance change was made as to when final settlement may be made with the contractor. Before, if there was a dispute among claimants of public works contractor, like with the subcontractors, the suppliers, and with the contractor, then final and complete settlement with the contractor after 30 days after the date of completion and acceptance of the public work could be made if the county was furnished with satisfactory evidence, including the payment in full of all subcontractors and the material suppliers, et cetera. Now it states that final and complete settlement with the contractor can be made after 30 days if the contractor has materially fulfilled all its obligations under the public works contractor. However, if the county receives a claim from a subcontractor or a supplies person, then the county shall withhold the amount of the claim until the claim is resolved under this section. So I'm sure that you'll work with your county attorney when it comes to any of these type of payments with the contractor. House Enrollment Act 1192, I'm not going to really go through this in detail. It's just it was a change with distressed political subdivisions. Hopefully this never applies to any of you. But there has been a change in when a political unit can claim to be distressed. So if that's something that your county is looking towards, then this 6-1.1-20.3 would be the area that you would want to look at for that. And finally, House Enrolled Act. Okay. House Enrolled Act 1200 amends IC 31-37-19-1 and -5. It's juvenile court order of supervision of child by probation department. The child or child's parent is, I'm not sure how a child can be responsible, but anyway, the child or child's parent's responsible for certain costs, and any costs collected for such services shall be deposited in the county supplemental juvenile probation services fund. And under 35-38-2-2.3, that was amended. And again, as a condition of probation, the person may be required to enter certain programs, and then they're responsible for the cost, and then that will be deposited in the county supplemental adult services fund. Senate Enrolled Act 191 is just for your general information that, yes, investments can be greater than 2 years if there's been an ordinance passed, just in case somebody says that in your county and go, no, that just can't be. Another thing that the DLGF did not bring, let's see, under House Enrolled Act 1195, and this is not an area that I'm going to talk about other than that this has to do when a taxpayer requests for review by County Property Tax Assessment Board of Appeals under IC 6-1.1-15-1. And if the taxpayer doesn't fails to appear or the representative fails to appear, there could be a penalty of $50. The statute does not address where that money is to go, and our recommendation is that it would go into the general fund then, since it's silent on that.